Welcome to the Daily Brief, where we'll go over the highlights in the market for Thursday, October 27th, and then see how things look on a highlight basis for Friday, October 28th. And I'm only going to do a daily brief video today, not a full length video. Even though there's lots of things happening, we really didn't see much change overall in the picture that we've been dealing with here. And so I'll just kind of mention those bullet points. And if you watched yesterday's video, it's pretty much the same thing. On a short term basis, we continue to be overbought. The 50 period moving average is still acting as resistance. We tried to go up to that in Thursday's session. That was rejected and we came back down. And as far as the intraday movement of prices, we didn't see all that much. So let's go back and talk about what happened. At the open, we did have a lower open, but prices ended up rebounding and got above the daily pivot. We never got up to R1, but we did get above the daily pivot at 38.47. And that was the more positive part of the day, was right after the open. As the day continued, selling came in, took prices negative, and eventually went down to S1 at 38.08. And that ended up being the close. We bounced a little bit up off of S1, only to come right back down and close at S1. We were down 0.61% overall. Volume continues to be above average. And the technicals, they're still turning more positive. Short term, as I said, we're more overbought. And we really haven't worked off that condition that we've been dealing with for the last few days. But we're still looking more positive in a bigger picture. Inflation and interest rates are the real concern, and that'll probably be a real focus, if not the focus, in Friday's session because of the reports coming out. And the big thing that really pushed prices on Thursday were earnings. And I'll go through some bullet points on that. The Fed speak they're on silent mode right now. And then, of course, we have the midterm election coming up. And that doesn't necessarily have an impact on the stock market, but policy going forward might have some influence. So, what are some comments? Meta, which is Facebook, Apple, and Amazon had disappointing earnings, and that really took the Nasdaq and the Nasdaq 100 down, and the growth components of the S&P 500 that put them under pressure. And then other companies like Caterpillar, Honeywell, Merck, and McDonald's, they actually went up after their earnings reports were released. So the Dow did okay. The small caps and the mid caps did okay, but the growth areas of the S&P and the Nasdaq and Nasdaq 100 were under a lot of pressure. In Europe, the European Central Bank ended up raising rates by 75 basis points. Interest rates in the US actually declined, and that is giving some support. That's helping to keep things a little bit more positive. If interest rates continue to decline and stocks can get some buying power underneath them, that will really help things. The NASDAQ and NASDAQ 100 underperformed, as I said. And then this scenario that the Fed, they're going to go ahead. It's really looking like, even though it's dropping a little bit percentage wise, that they're going to raise rates next week, November 2nd, by 75 basis points, and then possibly consider not raising them as much in December. That scenario still seems to be viable. And as I stated earlier, the 50 period moving average is acting as resistance, where the Dow small and mid caps held up a lot better. In fact, they advanced on the day. The 10 to the 5, the 10 to the 2, and now again, we still have the 10 to the 3 month. Those yield curves are inverted, where the 30 to the 5, it was inverted, then not inverted. Now it's back to not being inverted again. Sentiment it ticked up one, so it's looking a little bit more positive. Currently, the reports that came out and the market didn't react to this as much as you would think. I think the earnings report kind of overshadowed things, but third quarter GDP, it was up 2.6%. They expected it to be up 2.3%. The deflator, the advanced reading, was 4.1%, and which is lower than expected, which they thought it would be at 5.3%. The last time we had that, and this is kind of an inflation rate here. Last time we had this, it was at 9%. Jobless claims came in just about as expected, 217 versus 220,000. And durable goods were weaker than expected. They were up 0.4%. They expected it to be up 0.6%. If you take out transportation, they were actually quite a bit weaker. They were down 0.5%, where they had expected it to be up 2%. Our trend is still positive. The green line's on top of the red line, but those lines are pretty close to each other. So the trend is weakening and we're below the moving average. I've changed our bias back to mixed to negative. There's still a basic positive backdrop that is happening, and we continue to be overbought in the short term, but we've had 2 down days now. So you kind of have to take that as being a little bit more negative. And I had our momentum at positive. I switched that back to mixed just because we had 2 down days in a row out of the last 2, 3, 4, 5 days that we've had. Here's just the one chart that I will show in this video, how we were able to come up to the 50-period moving average. We broke above that and then came back down. Well, we tried to come up to the 50-period moving average in Thursday's session. That was rejected at this point and has fallen back down. So now we have to say, are we going to continue to fall lower? We do have some support at this pivot level, or are we going to get some buying that can take prices back above and then close above the 50-period moving average? And then down below, you can see where volume is back to above average. So we're kind of at a tenuous spot right now. Support has been holding up, but resistance has also been holding up. So we're going to need something to be decided to take us either higher or lower from here, but the backdrop still remains more positive. So what's our outlook? The technicals continue to improve, but we're still overbought. We've had 2 down days now, but it wasn't enough to wear this off after we've been hitting resistance. Doesn't mean that we're going to turn and keep going, although that could happen. But right now, we just need something to push us higher. In Friday's session, we have personal income and spending. That's a biggie. But then the big one is going to be PCE prices. And then the one the Fed really fixates on is the core PCE prices. This is another important one, the third quarter employment cost index, pending home sales. So we'll get some more housing data. And then we'll get the final consumer sentiment survey. We had the preliminary one a week ago. Now we're going to get the final one, or 2 weeks ago, I guess. But we have this whole list of geopolitical events. Right now, what the markets are really fixated on is inflation and interest rates, and that'll be with the economic reports that come out. And then earnings. I've switched that over. Now, this will likely go away at some point because what's been reporting lately are the big monster companies that really can influence the market. As other companies report, then they may not be as relevant to the overall indexes. And then our scenarios can't really go with the down one yet, even though we're bouncing off resistance and we're still short-term overbought, but things haven't really switched over negative. Our oscillators continue to be positive. We're showing some improvement within our charts. So it's really hard to take a negative scenario currently, but there are all these different headwinds that could push things lower. The technicals are trying to stay positive, but they're still overbought after hitting resistance. And that's the same reason why, even though we're going with the up scenario, because we're seeing things improve, we're having a really hard time going higher until this gets dealt with. Our scenarios, they're not really, some of them improved, some of the longer term ones improved because they take longer to calculate and they're not picking up this short little decline that we've been having in the last 2 days. But our sector rotation, they're not really doing all that well, specifically the growth side. And our positive setups, some of them are showing some improvement, some of them are unchanged. Not seeing an awful lot of weakness in the setups currently. Technicals, they're still trying to turn over and become positive. If we do start the fall, we'll want to keep an eye on the 20-period moving average. It's turning up. It's below where current prices are at. But if we really start the fall, we'll want to see, is that support level going to end up holding? The pivot points, the fib retracements, so far we're a little bit above, a little bit below on some of them. So we're kind of in between right now. And we can't really go with the sideways scenario because the ADX, even though it's weakening and it's just recently switched positive, it's still above 20. So our conclusion is the S&P 500, it's trying to stay positive, but it's been declining after becoming short-term overbought and hitting resistance. I mean, how many times can I say that? And same thing with the short term. And that's what we're dealing with right now. It's more the short-term look, where the intermediate term is still looking more positive. We still have a couple of overbought indicators, but not as much as we're seeing in the short term. And then long term, we're seeing some improvement with our long term indicators. But as long as we stay below that 200-day simple moving average, things will remain negative. So thank you. I hope you found this helpful. I will prepare a full length video over the weekend, as well as the weekly video and intermarket analysis video.